Hello friends, welcome back. Let's take a look at Bitcoin together. I'm Rocky Outcrop, the sun's in my face. I don't know if you can properly see me. We're all Rocky Outcropticians here together on the channel. Thank you so much for joining me if this is your first video. And what do I have up behind me? Well, that is the 24-hour Bitcoin chart. Is that actually correct? No, I'll tell you what, that must be the Tezos chart. There we are. 24-hour Bitcoin chart. Speaking of Tezos, I do Tezos videos every day, as well as Ethereum, Chainlink, and Bitcoin. So check out the channel for those if you're interested, of course, and like and subscribe for this for daily content. Right, anyhow, so what are we looking at? What's happening with the prices right now? Currently, the price is 8,843. And if we just bring up this price action a bit more and zoom right on in, take a look at things. Really, we've got this consolidation shape happening just in the current price area at the minute. A couple of different questions about that. You know, is it just a sort of symmetrical triangle? Is this like a pennant with a pull here, where you can take a measured move, including the pull off the back of it? And what sort of things are we really looking at in terms of the up and down side? Well, if there was an upside and you know, if this was the case, it would be kind of a bullish pattern. You could be looking up towards the previous highs, and indeed perhaps even going in and setting a higher high if you were to get the full extent of that measured move. And towards the downside, you'd be looking at going down all the way to 7,260 if you were to get the full extent of that measured move. Now, say you just instead wanted to be more sort of conservative about things and think this has been a little sort of symmetrical triangle or whatever, then you could look at a breakout, perhaps taking us up to areas here above, you know, above this previous price action over on the left, and we could be looking at having a higher high in here as all part of, you know, staying out with the distance of this sort of potential rising wedge formation, you know, up towards these 9,828 areas. And if you make a little comparison, if you just leave that on there actually, and make a little comparison between a potential measured move off the back of this and where that takes you to, you can see that symmetrical triangle type thing isn't as big as the wedge measured move, and we've not had the full one of that yet. And if you were instead to think of it with the pennant type formation, then you can see that that's more in line with the wedge type idea. So you can kind of see how these things relate to each other if that were to be the case. And of course, the equal and opposite side of that is true. If they were to break towards the downside, you'd be back into this wedge again, and there'd be a couple of little things happening along the way. Now we've got this white line going along here. And every time I look at the Bitcoin chart, I forget exactly why it's there. You can see it doesn't line up properly. I suspect I've moved this on my mobile phone when looking at the charts between videos. Overall, if I just kind of make this line up a bit better, there's this question to be asked of, you know, will we ever make it past this downward sloping area or this downward sloping resistance line here? And if we go back down to the daily time frame, you can see that we're more or less in right at that crucial point. That kind of comes in the middle of where this symmetrical triangle is, and it does raise up a lot of sort of questions when you're looking at the monthly time frame and breaking a macro sort of structure in a positive way on the monthly time frame there towards the upside, and you've got the fundamental shift happening here with the Bitcoin happening in no time at all now. Then you know that kind of ties together a wee bit, how you could be looking towards a different phase for a longer period time off the back of all of that. But of course as well, there's a lot of considerations to be had with this fundamental change that's happening in the markets. And on that note, I'm actually going to link to a Bitcoin halvening video at the end of this one done by TradeSpot, which I highly recommend you check out. I've not actually watched it myself yet, but I've heard good things, and I'm going to enjoy watching that after I finish filming here today and try and learn a little thing or two about the halvening, because I think there's a lot of information out there that people kind of take for granted. You know, for instance, the halving happens, therefore supply has gone down by half, therefore supply goes down. If demand remains constant, the price ought to go up. You know, that's just kind of the real basics of it. But I know that there's a lot more to kind of consider, really, in terms of how the world actually works, as we've seen in the oil markets recently, and as we know with sort of how people look towards market share and the way that people capture more market share. Companies do. It's quite ruthless, really. Organizations like to to capture market share by kind of killing off their competition, as opposed to sort of doing it in a sort of really collaborative or positive sort of way that you might think, or just simply letting the chips fall where they will and realizing that supply goes down, so we're all a winner. No. They would rather take advantage of that opportunity to kill off some of their competition. So there is a genuine sort of question to be had there, question mark. But where is the price currently? There's 8,836. So where is it currently? And you can see that right now, coming in here, I'll just actually borrow this line from the top of this thing instead to make just so I can sort of draw it in flat. In fact, no, I'll not do that. I'll get rid of it, and instead I'll do one of these horizontal lines. So we just put it in right where the body is of where we achieved yesterday is the height. Oops, that's the wrong thing. That's the wrong one. What is it? Alt H. Alt H gives you a horizontal line, right? Let's try it. Pop. Nope. Pop. 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 Nope. Control H. Nope. History. Oh, I've got one. Oh, it must have worked. Okay, you can see that we never actually managed to make it above this area over here at 9,200. I could have just done that more simply. So we never made it above 9,200. Things have been kind of rubbish actually over the last couple of days, really, in terms of the bullish case scenario. And this being the sort of the first obvious thing about it, that we never actually made it up above that 9,150 area. So we're in this area where we consolidated at before in the past, before going down here. And while we have undone while a lot of people out there are celebrating the fact that we've undone all of the sort of the damage of March the 12th when we saw prices go above 8,000, that was just part of an overall downward trend, and that you've not made daily highs again until you're above the 10,500. So that's that measured move we were talking about earlier on and stuff like that. You've not made higher highs until you're up there. So all of this could all constitute a lower high on the daily time frame overall. But if you want to consider this phase here where it was part of a head and shoulders as being, if we just get the wee drawing thing and say here, like if you've got this chunk of price action here was part of a head and shoulders pattern, and then when it actually resolved itself, the fall down came from up here, and this is where we haven't actually achieved quite yet. So when you talk about having undone all of the damage of March the 12th, that kind of discounts the fact that there's a lot of people who would have considered it to have actually started on March the 7th and gone all the way down there, and that's not been undone yet. So a lot of bullish hysteria out there doesn't really sort of add up until such times as you're above that open and closed. And what else do we have in that area? Well, we've got these two lines in here. There's magnolia lines run along there. They're 786 retracement points, and we know that the market can turn around at 786 retracement points, and it does so very often. Let's just take a look over at the CME charts, because we discussed this a fair amount in the past as well, in terms of in the recent past, in terms of this 200 simple moving average. And we knew that when we came up to fill in this gap here, that there was a very strong chance of then coming up, filling the gap, that satisfying that entire move, and then coming back down to retest off the 200 simple. And that's what we've seen happen, and we're being supported by the 200 simple, which is good to see, because we want to see the 50 simple start to turn around and move towards the upside. And another thing that we've talked about quite a lot, to put into more context recently, is how when you look towards the left and you go 50 bars to the left, what we talked about an awful lot recently was how this big drop down on March the 12th is no longer influencing our 50 simple moving average on the spot prices. In here, you can see the red dotted line. It's starting to go towards the upside, and a very, very sort of upward movement. It's very much sloping towards the upside in a positive, bullish movement, smooth curve towards the upside. Okay, and we knew that would happen from May the 1st, because all it takes is to measure 50 bars over, and you can see that in this period here that you're starting to add in higher candles than the ones you're taking off over there. And we talked about that an awful lot, and how this is good because it can lead in towards the this is what we would want to see happen in the 50 simple, coming up towards the 200 simple, so we could get a bullish cross on the go. If we go over to the CME prices, we can put all of that same discussion into a bigger context and look 50 bars over to the right here and say when we're actually going to start seeing that happen in it. And as I go over to the right, you can see we're just getting to 50 bars now. So that is where the 50 bar happens on the 21st of May, is when you'll be able to start discounting this price action here, and that's when you would see the 50 simple moving average actually curving towards the upside. And in the meantime, what we're going to actually see over here in this chart is most likely for it to continue to go down slightly as we add on further downside price action, taken off price action where it's ahead of us, which comes back to this question again of as I was saying before, just to tie everything together. What we like to do on the channel, by the way, is FOMO-free, greed-free, sort of technical analysis without all of the bullshit, okay, and to look at things in a holistic manner, using certain different things. And when we talk about this area over here as being important, on the spot prices, we discussed that already. If you go over to the CME prices, you can see here that these candles are up above where the price action is happening at. So every day that another candle goes by and its candles are coming in here, we're adding on to the 50 simple a price from here, and we're taking off one from over here. Okay, so we're taking off higher things. So the 50 simple will continue to go down the way in the meantime. So it's quite crucial in a sense on the CME charts that we see the prices go above this area over here, and to just measure that out. This area over here is 50 bars away from there, is still over there on the 17th of May, that sort of a thing. So we're not going to see that happening until the 17th to sort of 21st of May sort of period of time. And that's that leaves open a big question, because the halving is coming up between now and then, and that's a fundamental shift in how in the market. It's a fundamental change in the Bitcoin pricing. So that's something to really bear in mind at the moment. Overall, what we have is that the price has been bullish. Now, the price has been bullish, and we've got an uptrend. This is an uptrend, and that's very good to see. And during an uptrend, the wise thing is to say, hey, it's an uptrend. It'll keep going till the end of the trend. The trend is your friend until the end of the trend. And when would we start thinking that the trend is potentially over? Well, it comes at the time of setting in lower lows. And if we were to dip back into this area again, the whole time, if we stay within this wedge, we wouldn't be putting in a lower low if you consider this area to be the past low. If you consider this area down at the 68,050 area to be the past low, we also could come down and satisfy pretty much the full measured move off of this wedge down there in order to put in that lower low, that higher low, and come in, and if the prices come down to 6850 and then turn around from there, then that would be acceptable. And in terms of measuring how far down that is, we just sort of measure from the recent high there that we had down to where that low could be. That's 25% price action. It's a lot of massive. It would be a massive trading opportunity to have as well, of course, towards the short side if you were looking towards that. And that's fair enough. But in the meantime, we could still see prices go even higher, because we know from looking at the past, I'm not going to do it in this episode, but we know looking at the past halvenings that actually after that happened last time, there was a 30% drop down in price from at the time of the halving itself. So or 40% if you measure it from the high previous to that. So the prices could keep going up in the meantime in order to and then end up with a 30% odd drop down thereafter. If you go up to around about there with the prices, then you get your 30% drop down. And where does that come in at? 10,000. So there is still the opportunity for the prices over the next wee while to go up and try in that 10,000 area. But any of that happening in the big picture still remains fairly bearish, because when you go up to the bigger time frames, just to make it so that more price action fits on the charts easier, it's the same thing on the daily, as well. You can see overall that there's this downward sloping trend lines that were, downward sloping area that we're in terms of the price action for the last year and a half, and coming up to 10,000 would still just constitute a lower high after having had a lower low in beforehand. So that could mean that there's a very strong bearish case to be made in around the time of any drops down, which in and of itself would create an awful lot of FOMO towards the downside. And in terms of the sort of the longer term bullish picture, should we actually have the prices come down and then go back up again, you can see how the big accounts would get a lot of liquidity coming in those areas, or even indeed in here if we were to just drop from this area. And then if people got very bearish, there's your bear there. If people got very bearish and we're sad about things, then then of course there'd be a lot of liquidity towards the downside when people started looking at these macro shaped things and saying, hey, we're on the way down to make a potentially lower low. Down here perhaps are this big horizontal line that we have down here on the Bitmex chart down there at 3580, where we saw the prices wick down to previously. If we were just to go back down to where our previous lows were, for instance, or that sort of an area, you could get a lot of people trying to short it in here, who then get squeezed out as we come in and actually sit in a higher low and then go off for the big macro trend. So in terms of, I'm invested in Bitcoin and I want to think about this for the future, I'm not really that interested in trading it so much. I just want to know where we're going over the next wee while. You could benefit an awful lot from sort of staying on the sidelines and just waiting to get in, and when the market's sort of shaking itself out a wee bit. In terms of trading this, there's big opportunities towards either side should we see certain things happen. So what are those things that we'd like to see happen? And I think the Bitmex chart here kind of makes it a little bit easier, as I've got these horizontals on here to show you a couple of areas. 8,500 is where we need to see this prices remain at the minute. Should they fail in that, then in at this 8,000 area, where we've got the 200 simple, a confluence, a whole bunch of moving averages in around that area at the minute, and the sort of the 618 of the previous Fibonacci retracement in that area as well. And then of course thereafter you've got the 50 simple coming in, and it's just, as we see it going up towards this top side in this 50% retrace area in around that 7,000 area, of course, as well. And we know the 6850 area. So there's a lot of different area price levels on the way down where you could potentially see the prices turn around at. The first sort of warning sign for us can come in at this wedge area. If we come back into the wedge again and then go to the bottom of it, you've got a 236 Fibonacci retracement lining up perfectly here with the bottom side of the wedge. Okay, so I think all these things tied together fairly well speak for themselves. And while maybe what I should do is summarize everything that I've just said, I'm not going to, because I'm going to move on with the next videos. It's too late in the day, and I think it was quite clear overall what I'm saying. There's opportunities to the up and downside. In fact, no, I'll look at the oscillators and whatnot before going off, so excuse me for saying cheerio too early there. And I'll also point out as well, we've got a gap here in the GBTC, we've got a gap here in the GBDC there as well, and we've got a gap there on the CME chart. So this gap, for the first gap on the CME chart, coming in at 7,500, ties in neatly enough with the 7,000 with this 50% area here at the 7,200, where you could see a potential measured move coming off the back of that wedge. And you've also got the gap then, on the gap on the GBTC that's all the way down here at this area, could tie in as much as with the prices on the spot prices coming all the way down to this area here, unbelievably or believably or not, where I would see 5,500 or so coming in at, and that's a potential thing that could actually happen, without breaking structure or doing anything completely crazy in the meantime. So that is something that could happen, but anyway, yeah, we said we'd look at the oscillators, and I can do that. We were consolidating just now in this little period here, so we're not really going to learn anything, so I haven't actually missed out on much. There was the touch of bearish divergence here on the MACD. You got a high there and a lower high there as the price action put in highs. It's very messy. Excuse me. And I'll just keep undo. So you see, we've got those there on the. We've got that bearish divergence there versus up here, and on the stochastics it's not there, and on the RSI it's not there. So there was that one out of three elements in terms of that, and we know that there's the potential for a pennant, a potential for a sort of symmetrical triangle, or maybe even a descending and ascending one, depending on how you want to draw it in yourself. I don't think it really particularly matters. And yeah, so yeah, we're in an uptrend. It's not divergent across 2 out of 3 of the divergence oscillators we look to, so we could expect to see higher lows, higher highs come in. Higher lows we can cope with all the way down to 8,000 or so without getting too particularly carried away, but bearing in mind that that's a good solid 10% move away from where we are now, and near enough 20% away from where we were, or our highs over here. How big a move down is that? Near enough 15% move down from the previous high that we just had here the other day. So those are the things to kind of be aware of. There's plenty of trading to be happening in the meantime. We've come up here, we've not set in a higher low for quite a while. I think that we are kind of our due one, just to maintain, just to avoid becoming overstretched in terms of these oscillators. For instance, the stochastics here, this will be the last point I make and then we're done. The stochastics here came up as high as what, 90 96.99. Looking back the way, it was only ever as high as this at market tops previously. 9th of February being the last one, and then the time before that, you know, like the time before that was as high as this. Where are we looking? You know, like where was it as high as this before? All the way back over to 2018 February sort of times, when you've seen peaks in the markets coming in. So the stochastics are up to the point where you could say that, you know, that you could look towards that as being quite toppy. The point I'm making here is that that while we absolutely could come up here and go up higher, absolutely, you know, that absolutely could. It's like Walter White said when he was making that crystal meth, that it's the final 3% are the hardest. You know, we could come up again, but to get up to 97, 98, 99 up here on the stochastics and going up to like all-time high stochastics is what you would kind of need to do in order to avoid having bearish divergence there on the daily time frame. You know, and if you did that, you would expect the prices to drop down, right? And if you didn't and you got bearish divergence, you'd expect the prices to drop down. So at some point along the way, there'll be some sort of correction, you know, and that will have to do for today. Thank you so much for tuning in. I've been Rocky Outcrop, your pal. I don't know if you've been able to see me. I hope that my background isn't too bad. I've got the sun kind of coming through the window right now. And as a Scottish person who rarely sees the sun, as you can tell, I'm blind here. As a Scottish person who rarely sees the sun, I feel obliged to let this happen, even though it might ruin the video for today. I can hardly see the screen I'm looking at either, but if I don't let the sun shine on me at some point, then I'll get, you know, I'll just shrivel up and die. So I need to let it happen. I'm sorry, it's for my health. Like, subscribe, share this video with a friend if you've got one that you think would like it. And if you're interested, the reason I didn't put Bitcoin in the video title yesterday was to sort of test out this rumor that's going around that people are getting shadow banned for using Bitcoin in the title of their videos and stuff like that. Well, what happened is yesterday's video got even less views than your average video, and well, you know, sad for them, because we spoke about not various targets, but we kind of, you know, we spoke about it yesterday. We didn't expect the prices to go any higher yesterday. You know, the fact that they've dropped down today, only a 1% move to the downside, but the fact that they've dropped down today is of no real surprise to me overall, or that they didn't see the prices going up. And I look at Twitter and stuff and I see, oh wow, what a breakout, that's amazing, there's breakouts happening. And I think that's not a break. We talk about this all the time. It's not a breakout, it's just a badly drawn wedge that's going to turn into a channel. That's all that is, or whatever else, you know, or people talking about certain things, and what they do is they look down at where was it, I saw someone talking about a breakout today on Twitter from this, right? This is the sort of thing that you see on Twitter all the time. Somebody had a wedge drawn in like this, right? And somebody had a wedge drawn in like this, and they're like, wow, that's a brilliant breakout. And well, you know, if you've been watching along long enough with these videos, I'm sure you kind of think to yourself, what's the point in doing this? What's the point in that technical analysis? What's the point in it, you know? Like, what is the point in it? Like, if you've got like, it's not going to get, you know, if you want you think for it to be a proper breakout, the minimum move off that would be taking us back up to 9,000 at least. You know, it's not happened so far. It could still happen, sure it could, but you know, you've only seen a breakout once you've seen a breakout, right? Okay, so anyway, whatever. I'm not going to get caught up on things. I'm going to move on to Ethereum, do Ethereum, Chainlink, and Tezos today with the videos, publish them. After that, I'm going to look at what I've published and see, well, actually look at it when I'm editing it and see if I'm visible at all anyway. Fingers crossed I am. Highly think I won't be because of the sun. And then I'm going to watch that trade spotting video, which I'm linking to just now. I highly recommend you watch it too. We'll watch it together and join the Discord and say hello to Trade Spotting, who's in the Discord, in fact, himself. And yeah, that's going to do it. Thanks so much for tuning in. You're my best pals out there, so I really appreciate it. Share me and us, all this community, everybody else's friends in here, 560 odd of us Rocky Outcrop Ticians. Share them with your friends, because we're all eagerly awaiting having more Rocky Outcrop Ticians join us and become bigger friends. Okay, so see you next time.